FTSE 100 suffers another big fall amid global market volatility. What's fueling the sell-off? Another brutal day for global markets, and the FTSE 100 is taking a serious hit. The United Kingdom's flagship stock index, the FTSE 100, has just posted its second major decline in a week, as panic continues to spread across the financial world. Trade tensions, tariff retaliation, currency instability. Investors are reacting, and the headlines are growing more alarming by the hour. So what's going on? Why is the FTSE falling so hard? And what does it mean for you, the investor, the saver, the business owner? Let's break it all down. What is the FTSE 100 and why does it matter? If you're not familiar, the FTSE 100 is a stock market index that tracks the top 100 companies listed on the London Stock Exchange. These include major global players like BP, Shell, Unilever, HSBC, and AstraZeneca. When the FTSE 100 drops sharply, it's a strong signal of broad investor anxiety, not just in the UK, but across global markets. And this week, the index has dropped by more than 4%, wiping out billions in market value. What's causing the sell-off? There's no single reason, but a perfect storm of global risk factors is creating serious pressure. Number 1. US-China tariff escalation. The United States recently imposed sweeping new tariffs on all imports, and China has responded with a 34% tariff on US goods. The result? Fear of a prolonged global trade war, with massive implications for multinational companies. Number 2. Falling investor confidence. As volatility increases, investors are pulling out of stocks, especially those with international exposure. The FTSE 100, heavily reliant on overseas earnings, becomes a prime target in global risk-off moves. Number 3. Stronger British pound. Yes, a strong currency can be a problem. Many FTSE companies earn in dollars and report in pounds. So when the pound rises, it hurts earnings in local terms. That's what we're seeing now, as a sudden surge in the pound adds another headwind to an already nervous market. Who's getting hit the hardest? Let's take a look at the sectors under the most pressure. Energy stocks, with oil prices slipping and geopolitical tensions rising, companies like BP and Shell are underperforming. Banking and financials. Global instability often drives down bank valuations, especially those with exposure to emerging markets or trade finance. Consumer goods. Companies like Unilever and Diageo that rely on international sales are facing profit squeeze fears. Travel and hospitality. Concerns over inflation, slower spending, and trade restrictions are hurting travel operators and airlines. It's a Red Sea across the board, and investors are taking cover. What are the broader implications? The FTSE 100 decline is not just about stocks, it's about what happens next. Investor sentiment is shaken. UK pension funds, which often rely on equity performance, may face new funding pressures. Currency markets are seeing wild swings, with the pound spiking and then dipping in rapid succession. This volatility could also affect consumer confidence, corporate hiring, and even monetary policy in the UK and Europe. Is this the start of a longer bear trend? Some analysts say yes. With no end in sight to the trade tensions, persistent inflation, and a possible slowdown in global demand, this could be the early stage of a larger correction, not just in the FTSE, but worldwide. Others believe we're just seeing a temporary pullback, and that once clarity returns to trade and policy, the markets will rebound. But no one is calling the bottom, not yet. What should you do as an investor? This is a moment where smart strategy counts. Here are a few steps many are taking. Reassess international exposure. If your portfolio is heavily weighted toward global exporters, consider rebalancing. Increase diversification. Spread risk across multiple sectors, asset classes, and regions. Consider defensive sectors. Utilities, healthcare, and consumer staples are historically less sensitive to economic shocks. Stay liquid. Having some cash available allows you to take advantage of any significant dips or corrections. Avoid emotional decisions. Sharp drops often trigger panic selling. Don't let fear dictate your long-term plan. What's the government saying? The UK Treasury has acknowledged the volatility and stated that it's monitoring global market conditions closely. Bank of England officials have not yet hinted at any emergency measures, but analysts suggest that if the downturn continues, rate cuts or liquidity support could be on the table. Final thoughts. What happens next? The fall of the FTSE 100 is more than just a market headline. It's a signal of broader global anxiety. This is about confidence. This is about trade. This is about the health of the world economy. Whether this is a temporary stumble or the start of a sustained downturn depends largely on the next steps from policymakers, corporate leaders, and investors like you. So, what do you think? Is this a short-term correction, or are we headed into a prolonged bear market? Let us know in the comments below. Don't forget to like, subscribe, and turn on notifications, because these markets are moving fast, and we'll be here to keep you one step ahead. Stay sharp, stay strategic, and stay financially focused.